Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're going to talk about saving taxes again. I talked about it a week or two ago, but once again, that S election, if you have an LLC, step up because you can save yourself on taxes this year. That's right, it's not too late to file the S election. We're going to talk about the late S election for your LLC. That's right. You can fax it in, ladies and gentlemen. And at the top of this thing, we're going to talk about it. So without further ado, Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. Welcome back. That's right. We gotta make the money. Then we have to pay taxes as an American citizen or citizen of any country pretty much. And you don't want to give away your hard-earned money. You want to be a top 10%er. You want to keep it. Why? So you can use it to invest and make it work for you while you sleep. Now, we're here at the Stop Struggling Now YouTube channel page. I want to thank you for being here. Thank you for again supporting the channel by watching the videos, and please share these videos because we can help other people. And you notice we have this join button over here on the right hand side. Members of the channel receive 1 or 2 videos a month from me. They receive updates specifically for members only about investments and different topics. So without further ado, let's get into how we're going to save money, because we have our LLCs. We have the extra streams of income. After you start calculating that you've made like $40,000 net operating income, that's after profit or revenue minus expenses, equals $40,000 or more. A lot of you will have it or more part. So if you have 40 G's or more, then you're paying too much in taxes, because as an LLC, you pay self-employment tax of 15.3%. We're going to get into it. I'm going to have a link down below for every page that I'm going to show you right now. I did a video about a week or 2 ago about this, but now we got to get into it because this is going to be a late election. As S Corp, you can file late, because a lot of people think it's hard to do. And in the last video I said, okay, why don't you just pay somebody to do it? And I left a link down below in the description. And a lot of people may say, well, I don't really want to pay the $350, the $400, the $450 to do it. Well, that's what we're going to talk about today, because you don't have to. Anybody can do this. This isn't some specialty item. This is the IRS, and they're actually helping you. But anyhow, you can see we're here at the ink file. So I'm going to give you guys something to think about. Again, I'll have a link down below, but you see this right here, the differences between an LLC. I'll get into it. Once again, just what I said, if you are taxed as a standard LLC, you have to pay employment tax on your entire salary. When you file an LLC and a Schedule C comes down to, let's just say $50,000, you're going to have to pay 15.3% of that on self-employment, because your LLC, after your expenses, if you have $50,000, your LLC passes through to the individual taxpayer on their 1040. So if you're going to have to pay whatever the 15.3% of 50, that's like $7,500, something like that, right? So that's how much you're going to have to pay in tax. No way around it. So of 50,000. So your net operating income is 50,000, but you could have only paid a salary on a W-2, because you're an S corporation. It would be a W-2 that you paid yourself 20,000. So now think about this. You paid yourself 20,000 on a W-2. You paid FICA, right? The same, nearly same amount is going to be 15%. So that means you're going to pay $3,500. You just saved yourself approximately $3,500 And the reason why is because the other 30,000 isn't taxed with self-employment tax. So that's the difference. You're still going to pay federal income tax on the total amount, but you just saved yourself $3,500 simply because you filed an S election for your LLC. Now, we're going to get into this a little bit further because, as you can see here, as a salary you pay your employment, as a distribution you only need to pay federal income tax, just what I was saying. Let me show, here we go. I'll even go with theirs. If you take $70,000 out of a business as a standard LLC, you pay $10,700 employment tax. Pretty simple, right? In contrast, if you split it up like I was talking about and you paid yourself $45,000 and you took out $25,000 as distribution, your salary of $45,000 is going to be on a W-2, so that's going to be taxed. You're going to pay the FICA on that, and the $25,000 is not going to be paid nothing to. So really, you're only paying on the 45. You would only pay $6,885 in employment tax. That's a savings of $3,825. You see how this works, ladies and gentlemen? Pretty simple. And I'm even going to do a calculator. I already have it set up. This is what it looks like for a person who has a net income after tax, after expenses of 40 grand in their LLC. Here's what you're paying in taxes. As a sole proprietor, $6,120. This is how much you're going to pay as an S Corp when you say, I got a salary of 16 and I did a dividend. Remember, I used to say dividends, ladies and gentlemen, of 24,000. Now you pay taxes of 2,448 and your savings is $3,672. That is enough to pay an accountant. They don't cost that much. That's enough to pay ADP. Payroll guys, it doesn't cost that much. All right, you can sign up with the revenue department within your state. You're going to have to pay the state employment, give them their cut as well, depending on what state you're in. So this is what we're talking about here. This is the difference on 40,000. So let's move up to where some of us might be making 100,000, right? So again, I always say stay around 40%, but hey, your tax person can tell you what to do better than I. All right, but general rule, 40 makes it nice and sweet. I can't get, oh, there we go, 40. Look at this, ladies and gentlemen. Sole proprietor, you have to pay 14, that should have been 15,330, but anyhow, $14,581 in self-employment tax. But because I wrote myself a W-2 for $40,000 and paid tax on that, $6,120, and that means that $8,461 stays in my pocket. You don't think $8,500 a year that I put towards some investment vehicle? Now you see why there's a discrepancy and a wealth gap, because I can take this money and invest. Now, not only can I invest, we're going to talk about that later, but let's get to the 2553 form. That's right. That's the form you need to file your election by a small business corporation, otherwise known as the S Corp election. All right. Now, this is going to be called, because if you do not file within like 2 months to 3 months after you formed your LLC in the tax year, then allegedly you're going to be a late election. All right. The reason why I say allegedly is because there's relief from this. All right. And I just want you to see the form, because it's nothing daunting. Just put in your company name, your employer ID, your address, the city, state of incorporation, date that you filed on the corporation, what kind of tax selection you're going to do. Most people are going to do calendar year because that's December 31st. Name of officer, if you're the CEO and president or whatever, your name only, an officer, and a phone number so they can call you. This down here is just simply saying, why are you trying to get this file late election? And basically you just say, hey, I didn't realize that I had to do it 2.5 months after I filed my LLC, because I really didn't even start my business right then and there when I filed. So I thought I was late. Come to find out, I'm not late, so now I'm sending this in. That's it. Simple. You're the officer of the corporation. You better put in your title and the date. It's that simple. And then over here, you have to put down whoever are the owners. And that's you, your address, a signature, the date, how much you're going to own, usually 100% if you're just by yourself. You could have a partner, but then it would be 50-50 and both partners would have to be here. Date acquired would be the date that you started. Then you put down your social security number or EIN number. Shareholders, tax year ends, 12/31. Most people will put that down. That's it, ladies and gentlemen. See? Simple. Now, part 3 is if you're trying to do something else and have a different filing year and different dates and things like that. So you don't even have to worry about none of that. And here we go again. You're not in a trust or anything like that. So again, you don't have to worry about nothing like that. So see, that's it. That's it. All you had to do was sign down here. Fax it in. Because here's the fax number, depending on what state you live in. So if you live in Connecticut, Delaware, and up here in the top portion, then you fax to this number. If you live in Alabama, Alaska, Arkansas, California, Florida, you fax to Utah. Pretty simple, ladies and gentlemen. Not that hard. At least this will get you your late S election for 2020. So you don't have to pay additional self-employment tax. All right? Here's the instructions. Very important. Most people don't want to read. Here's the instructions. You're paying somebody 2, 3, 4, or 100 or more just because they read instructions. All right? Look at this. This says right here, relief for late elections. That means because you didn't originally do that 2.5 to 3 months after you originally filed your LLC, then you didn't file for an S Corp election. So that means you're late. All right? So this is the relief. They actually put it in here. Look, relief of late elections. When I showed the piece of paper, there were words at the top of it. Okay? Here's what the words are. It tells you when filing Form 2553 for a late S corporation election, the corporation entity must enter in the top margin of the first page of the Form 2553, filed pursuant to Rev Procedure 2013-30. That has to be at the top of the form, of the 2553 form, ladies and gentlemen. That's it. That's it. And fax it in, ladies and gentlemen. And if you don't want to fax, mail it in. But the sooner the better, because they take 4 to 8 weeks before they get back to you and say, welcome to the S election. Make sure that you file all these items on time now, because now you're a corporation. You're going to have to actually have minutes when you have your corporate meeting at least once a year. That corporate meeting once a year is a tax write-off, ladies and gentlemen. So what do? You get your family. Well, hold on. Let me get to the bad boy section. You get your, for instance, you have 3 children over 18. You make them board of directors. You decide that the corporate meeting is gonna be in Hawaii. Guess what? We can get 2 days of tax write-offs, ladies and gentlemen, because we had our corporate meeting in Hawaii. Some of this is going to be a tax write-off. Not all of it, because the IRS won't allow all of it. But you can get 2 days of it written off. All right? But now, because they're board of directors, or they could be officers of the corporation as well, we get tax write-offs. All right? Keep that in mind. Keep that kind of thing in mind. I'm just saying. Now, I want you to see what happens when you have to, you have to, as an S corporation, you have to file by March 31st. All right? As an S corporation. Here's what an S corporation file looks like. 1120-S as in Sam for everybody on podcast. U.S. income tax for an S corporation is this form. All right? And once again, this is nothing crazy. Gross receipts, returns and allowances. Some of this looks like a Schedule C. Cost of goods sold, gross profit. Then it says net gain. Total income or loss goes here. Simple. And then here comes some deductions. Rents, bad debts, repairs and maintenance, salaries, and, wages. Yeah, ladies and gentlemen, wages reduces your income. Yes, it's a deduction. But look at here, the most important, pension, profit sharing. Depending on your company, you could say, hey, I want to match my employee, because under an S corporation, you are an employee. So now Eric, as the employee, put in $20,000 in his 401k, and me as the company, because now I run the company, the CEO of the company says, well, for every employee, we're going to match what they put into their 401k. Well, you can only put a maximum in of like $19,600. So as a company, I can match $19,600 if I want to. Therefore, $38,000, $39,000 could be in my 401k. And if you do it right, ladies and gentlemen, 401k pre-taxed, that means your capital gains coming back out is not taxed. Now you see how the wealthy stay wealthy. All right? So that's how you do it. I just wanted to let you get a look at the 1120S form so your accountant or whoever, it won't be unfamiliar to you. All right? Now you're going, okay, Eric, I'm an employee now of the company. That's right. As an employee of the company, the reason why an S Corp has to file by March 31st is because as a normal citizen, an employee that gets a W-2, you have to file by April 15th. So if you don't already have this 1120S filed, you're not going to be able to file your taxes by April 15th, and owner has to file a K1. All right? So you see the K1 right here, and you fill out the information. Pretty simple. Corporation's employer ID number, ordinary business income, net rental, net loss, interest income. Here we go. All right? This K1 has to go in. Everything has to go in along with my 1120. All right? So now I can file my taxes for my W-2 on my 1140. See how this works, ladies and gentlemen? Pretty simple. But again, consult your accountant, whoever you need to consult, because again, I'm not an accountant. Now, I want to show you something, because this is important, because I talked about contributions and why there's a big, huge wealth gap all the time. Because I could contribute more money because I have an S Corp, and instead of paying that tax money, that part of that tax money I could have put in a 401k. All right? So this is from the IRS. This isn't something I'm making up. Federal government rules. And again, it's written. So therefore, most people don't pay no attention to it. All right? So here, one participant 401k. That's what we're talking about here. One person that works for the S Corp is you. And if you're married, it could be your wife. So you and your wife counts as one person. It doesn't count as two people. But as far as contributions go, it could count as two people if you're giving her a W-2. Now you can put even more money separately into a 401k. All right? So I just want to get you straight on that. Now, look at this. This is the IRS. They just tell you what to do. The business owner wears two hats in a 401k. You're an employee and your employer. Contributions can be made to the plan in both capacities. The owner can contribute both. See what I'm saying, ladies and gentlemen? Now, they give you a perfect example. I'll have a link down below to this. Perfect example. Here you see it. $19,500 is the max you can do in 2020. All right? Okay, there's other things too. That's if you're under 50 years old. If you're over 50 and older, you can do $19,500, but you can also contribute another $6,500 as what they call a catch-up plan if you're 50 and older. So you can ultimately contribute $26,000 to the 401k. And in this illustration, they're giving 25% of compensation to the plan, and 25% of 50,000 is what, 12.5? I think so. Yeah, 12.5. Is that right, ladies and gentlemen? 25. Yeah, that's right. 12.5. So I can put in a maximum. If I'm over 50 years old, I can put in 38,005. So 26 comes from me, The company throws in 25%, which is 12.5. Now we have $38,500 in a 401k, earning potentially 20%, 12%, 30% on my money. When I take the money out of my 401k, tax free, because all capital gains are going to be tax free, ladies and gentlemen. You getting this yet? All right. Now, total contributions to a participant's account, not counting catch-up contributions for age 50 and over, cannot exceed $57,000. So that they do have a cap on it, because there are people that's going to be out here going, well, I make $120,000 a year. So you mean to tell me I'm going to give myself a W-2 of 60 and then I'm just going to throw the company in and match it? Yeah, well, you can only go up to 57,000, ladies and gentlemen. That's it, max. All right. So they again have examples here, so I won't get into that any further because that has nothing to do with the late S election, because I've already given you the rundown on how you file a late S election. It's that simple. You don't even have to have anything else set up. Literally, that's all you have to do. But after this, you're going to have to set up so you're going to be paying your FICA when you cut yourself the W-2s. So just keep that in mind. And because it's not too late, you can actually call everything you've gotten so far under your LLC. You can count that as a distribution. But what you're going to need to do, though, is, I'll give you an example. Let's just say you made, after profit, you know you're going to make $50,000, right? And then let's say this month, at the end of the month, you're sitting there going, well, we made like an extra $20,000. Well, then you should be doing a W-2 for $20,000 to yourself. You follow what I'm saying? And then the other can still be counted as a distribution. So you paid yourself $20,000 a W-2. That's below the $40,000 mark, I believe. But we made $70,000, let's say, profit. But I paid myself $20,000, and the $50,000 was a distribution. Now, if I use that number, 70 and 40, 28. So we're not that far off. So anyhow, that would be what you would do. So you're still not too late. And go see an accountant. They can all hook you up with this. But all I'm trying to say is we're not trying to pay additional taxes, right? So you wouldn't have to. And the last but not least, somebody said on the Friday Night Live, how do I get a 401k business? An LLC can have a 401k, ladies and gentlemen. It's an entity, just like you are an entity. You got to understand, the United States of America is a corporation. You are a subsidiary of them. That is why you have a tax ID number. Okay? Except it works a little bit differently. You're contributing to them. That's why you pay taxes. All right? But that's why you are an entity. So therefore, when you get an EIN number for your business, that is an entity as well. Except now you have a subsidiary. You understand what I'm saying? So here we go. There's the solo 401k, and it's right here. This is how easy it is under TD Ameritrade. They have it. I'll have a link down below to the business page, and here it is. Commonly referred to as an individual 401k. By allowing you to contribute as both employer and employee, this plan enables you and your spouse, if he or she works for you, to boost your retirement savings with higher contribution limits. Here we go. Both Roth and pre-tax salary deferrals may be permitted. Of course they're going to be permitted. What the heck? All right. So what we're talking about here, I'm clicking on the 401k and it comes to this page. Solo 401k, open an account. This is how easy it is, ladies and gentlemen. Okay? This is how easy it is. Sometimes you have to call in, but simply a retirement account designed for self-employed or business owners with no full-time employees. That's one of the things. You can't have a full-time employee for the solo 401k. All right, so if you plan on having full-time employees, you're probably going to have to do a 401k or ordinary, as I call it. All right, so they go over the potential tax benefits. You can go look at it yourself, and then you're going to start going, woohoo. What the heck have I been missing for the last 5 years, 10 years, 20 years? That's right, ladies and gentlemen. It's easily explained right here. All you have to do is look at it and don't worry about the tricks. That's why you have an accountant that you talk to and pay the man or the woman the $200, the $300, the $100, the $40 a month, whatever the case may be. It's worth it. You have it in tax savings, and it's a write-off anyhow against your profits. So what's the big deal? All right, you're making money. You should be happy to pay these people, professionals. So all I'm trying to say, that's it, ladies and gentlemen. Thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And a lot of you have LLCs and didn't know anything about this. But it's the end of the year. And in fact, some of you have LLCs and you'd be good to know this. You can actually go back in time and do an S election. But I will say for that, I would have a professional. Because you can actually go back up to 3 years. But you better have a good story. But just letting you know, in case, that could get you out of some tax problems. But anyhow, thank you everybody once again for watching and listening. Keep your head up. Keep moving. And I'm out.